What's up, everybody? Welcome to Mortgage Today for Tuesday, August 27th, 2024. And oh, what a day it was. UMBS were down 8 basis points in the first hour of trading. Stock futures were down 6.25 points. Bonds were under pressure a bit this morning with modest extension of weakness that began in European trading hours. Ongoing tension in Israel continues to weigh on global markets as well after recent escalations involving assassinations of militant leaders. While this morning's selling seems to have leveled off for domestic hours, it nonetheless leaves yields at levels that are on the unfriendly side of a prevailing trend. While it's true that this is a trend breakout in and of itself, it is also true that there are other trends to consider. We also got home prices. Home prices rose 5.4% in June according to Case-Shiller Home Price Index. New York led the charge with a 9% increase, followed by San Diego and Las Vegas. While both housing and inflation have slowed, the gap between the two is larger than historical norms. With the national index averaging 2.8% more than the consumer price index, this is a full percentage point above the 50-year average. Before accounting for inflation, house prices have risen 1,100% since 1974, but have slightly more than doubled 111% since accounting for inflation. Home prices rose 5.7% in the second quarter of 2024, according to the FHFA House Price Index. We are still seeing strength in the East and the Midwest, while the West Coast and mountain regions lag after surging during the pandemic years. September Fed Fund futures are still a lock for a rate cut in September. However, the handicapping is moving towards a 25 basis point cut instead of 50 basis point cut. Despite the nice little rally from weaker opening levels to stronger closing levels, it was a strikingly uneventful and uninteresting day for the bond market. Yields continue to operate in the same old range, with 15 of the last 17 trading days inside the range set by the NFP on Friday. One of the only ways to concoct an interesting narrative would be to call attention to the UMBS's outperformance, so the 5.5 coupons are still a bit stronger on the day, while 10-year yields were a bit weaker. We could simply say Treasury auction cycle and be done with it, but that's an oversimplification. Besides, MBS don't always outperform in auction weeks. The more accurate observation is that the short end of the yield curve outperformed the long end, and MBS have more in common with the short end these days. In other words, it really wasn't outperformance by the time we compare MBS to the more appropriate benchmarks. But anyway, that's nerd speak for the UMBS. Ended the day up 8 basis points at 101.02. So at 101.02, it's putting us in the upper end of this range, which is a very narrow range. We have a ceiling at the 101.18, which has only really been tested once, and the floor down at 100.79, which was a pretty strong ceiling at one point, so we don't want to test that again. Just have to wait for some more bad news.